Hi everyone, Neil. Good job. Neil's singing about his bus running away. Well, tonight we're going to talk about the euro, and the reason is because some people don't know what the euro is. The euro is a currency trade. Okay, it's traded against the dollar, but in the United States stock market, symbol FXE, you can trade it like a stock. If you have reasons to trade it, you can buy it and sell it on market open, market close. The euro currency trades pretty much all day long. Opens Sunday night and closes Friday afternoon. The charts are different because they're scrunched up different because the currency trades. Oh, this is a weekly anyway. It trades differently because it's open for so many more hours. But you can get the gist of the thing. Tonight we're going to be dealing a little bit with hypothetical trading again. And this is something that you should read. You can lose more money than you've invested. Don't play with money that you cannot afford to lose because the market will not give it back. Hypothetical or simulated performance results have certain limitations. Unlike actual performance record, you don't have cash on the line. You're going to act a little differently. So please understand that you have to understand these markets that you're going to be trading if you're going to trade. What I have here are 3 trade ladders. It's a simulated account. Like I said, there's no reason for someone with today's technology to go in there on the first day they open the account and decide that they're too good to practice. Well, let me tell you, the market will take your money in a minute, and if you're not prepared, and you're going to get in trouble. Behind it, I have minute charts running of Australian dollar, the euro, the Swiss franc, the pound, the yen, the E-mini S&P, the Canada currency, the New Zealand dollar, and gold. And these trade ladders tonight are here to show you different ways that you can learn to trade the euro without putting a ton of heat on yourself, and understand what you're getting into if you even want to be interested in it. The simulated accounts, you can enter orders right from the trade ladder. Like, okay, we're going to go short because tonight, some people didn't understand what short selling was. And if you want to make friends in a stock message board, go in and tell them that you're a short seller. They're going to run you away. Okay, do you want to
order sell? Pending?
We have an order entered to sell this limit at 54.50. We have
order pending.
A limit order to sell.
Order filled.
The euro, that's the large currency. It's more liquid, so we're filled. We have an order to do it on the micro currency.
Order pending. Order filled.
Okay, we're filled on both the euro and the micro euro at 27.57, 27.58, real close. Now the first thing you want to do is go in, and you could have already had this done, is enter a stop.
Order pending. Order pending. Order pending.
These should be, ideally placed at the same time that your order is. You never know if you're going to have this order entered, and all of a sudden there's like an earthquake somewhere, shuts the power off, and boom, just the thing goes completely in the opposite direction that you're trading, and then you're chasing this trade ladder around, and you're trying to get an order in, and geez whiz. So It's one of the first things you should practice is how to put your stops in, how to put them in at the same time that the order goes in. You know, to make it in this game, it's longevity. It's not. I've never heard of anybody make. And this is a quote. I never heard of anybody making their fortune in one day in this market. I've heard of people making a lot of money in one day, but I've heard many blow out in one day. And basically, a lot of times it's just because they don't have their stops in and change them, move them around. Now, in here you can put in a
Order pending.
profit stop too.
Order pending. Order pending.
I doubt if we're going to get filled on. It's 1:44 in the morning. Europe starts kicking in a little bit of action. You know, 1:30, 2 o'clock, and then 3 o'clock Europe opens. Okay, Neil. This is the euro contract. We're in at 27.58. We're last price 27.56. We're $25 in the profit. We have a stop loss order in, and we have a stop profit target in. The micro contract, like I said, there's a little difference in the spread. Here you have almost one tick continuously through the day. You can see 14 and 4. That's the volume of the offers or the offers for bid and offers for ask. Here we have 1, 2, 3 tick spread. So when you're trading a micro contract, the first lesson here is that you're going to have a little bit more of a spread. And that could mean too, if you exit, and if it's a market order on exit, you could take a little wider spread on that. While we're waiting for a few ticks to give us an idea of a tick value on those trade ladders, this is where we talked about last night. If you were here, I have the session close 5 o'clock, vertical lines, and then I have last night where I talked about an area of this previous high where sellers may be. And I said that last night, if the price gets up in above this area, people may be looking to buy it and bid it up. And there's a chance that it's going to reverse here. If you can see it reversed. Now, just to get you an idea of what kind of a move that is in the futures contract, it's 28.10 to 27.30. That's 80 ticks roughly. Roughly, if you caught the whole move, and that's like $960 worth of value. That's on the 1250 per tick contract, the 6E, and on the other, when I had the micro contract, that would have netted you 1/10 of that, so $96. And your stop would have been something that you would have dealt with, and it would have been above this high. And you have to add a little room, because when you get something like that, you can see how it's always just tested with a little punch above that line. That happens all the time. False breakout. People make a living just trading those false breakouts, and stop up here. If your stop was real cheap and like right above this area, you got hit. But if you gave it just a couple of points right above that high, that's 2022, and it looks like the high was 20. That's 3 ticks. That's not enough. So you'd have had to have been above here. There's other ways you could set stops too. You can use some Fibonacci. It's another great tool. You can see that price came up in the 236, 1236 area. It pierced that a little bit, and one of my favorites is the 1.272. It's 236 just front runs out a little bit. You could use Fibonacci to set your stops. You can use average true range. You can, there's several ways. The idea of this focus was just to show that, there's a possibility the price might reach that resistance area and sell off. This chart, I bring this up because these lines were stacked, and as they were stacked, I said it's amazing how that they continue to work. Well, look, it gapped through, reclaimed the warning line, or action reaction line, and it continued. Now it's respecting it again. Now, you can't make this stuff up, folks, and it's kind of a nature flowing thing. It's not, there's mathematical probabilities to some of this stuff, but it just amazes me every day. Okay, you can see with the trade ladders that it's a little slow. It's 154. Europe will be coming online soon, and I'm going to be focusing on the charts. You can see with the pound, 3 points at $1.87. 10 times that if you're trading the full contract. The larger contract, the 6B, that's equivalent to like $18. 12.50 is equivalent to $1. I think this is really $1.25, but they got it calculated. The setting must be in euro, something close to that. But you can see that if you want to trade, you can trade for 10 points being $250 or $125, or you could trade for 10 ticks, 10 points, 10 ticks for $12.50 to learn your trade. Add contracts, move on as you learn. There's no need to trade with thousands of dollars on the line and try to learn with that kind of pressure. No need whatsoever, in my humble opinion.
Order filled.
On one of the stops we're hit on the micro. This isn't anything. That's just a bunch of playing around while I was trying to edit this video. But if you can see that the yellow is the current price, if it's going to go up and hit the stop, then you're out of the trade. You don't average down or try to second guess it. Your analysis was done before you entered the trade. And that was a tight stop on the euro anyway, but this is for illustration purposes. You can see $62. The micro would be 1/10 of that, $6.20 roughly. I wanted to see if a stop would get run so you could see. Anyway, I got to go. Have a good one. Europe's coming online. I want to be there. Enjoy. Kurt from A Place to Trade.